Hello and welcome to Sprott Radio. I'm your host, Ed Coyne, Senior Managing Partner at Sprott Asset Management. With me today is one of our returning guests, Per Jander from WMC Energy. Per, as always, thank you for joining Sprott Radio.
Thanks for having me, Ed. Always good to be on.
Well, Per, you just returned from the 49th Annual World Nuclear Fuel Market Conference. First of all, I can't believe it's been going on for almost 5 decades. But secondly, what makes that conference so unique?
Yeah, it's been going on for as long as it's been an industry, I think, and you might even be somewhere. I think you may actually be attending all of them as well. So there's some really good veterans out there. But it's a really interesting one. It's coming after a very busy spring. Everybody gets together before summer and just kind of do one last push of talk about current topics. It's great too because it's not one of the regular trade associations, so it's a little bit more of an open discussion. They have very interesting panels, very interesting presentations, and most utilities are there, producers, traders, all who's who in the nuclear fuel business is there. So it's always great to get to meet everybody. And yeah, this year we're in Ljubljana, so in Slovenia. It's absolutely gorgeous country. I haven't spent that much time there, but it's almost like a Switzerland with a bit of an Eastern European touch to it. Beautiful city and just gorgeous high mountains, the Alps, and you got a Mediterranean in there as well. So it's a very, very popular place among the people that were there, and me too, certainly.
Well, I suspect next year you'll need someone from Sprott to join you, and I'm hoping I get the nod for that. So, you mentioned something just in passing, very active spring. Is that typical in this space that you get a lot of activity the first part of the year, or what's going on with that?
It is. On a regular year, you do see quite a lot of people just come out of the gate, but this year has been off the charts. And I think when you're kind of tracking the contracting activity in general, even though the spot market hasn't been that busy, the term market has been very busy. And of course, it's hard to get a full line of sight to everything that's going on, but all you need to do is just listen to what Cameco announces, and you can just tell that this is going to be a record year, I think. Certainly the busiest one for almost 2 decades, or at least a decade and a half. So it's we're on track for a very, very busy year, and in listening to utilities, it's certainly not done yet.
But let's talk about the difference between spot and term market. For our listeners that may not be that familiar with that, help us get a better understanding for that, the difference between spot and term.
Yeah, sure. There is a spot market for it, and you don't have to be a utility or supplier to play in it. Everybody can have an account. They can buy, sell. It's all stored at the various facilities around the world where conversion is done. But traditionally, where utilities do the absolute majority of the contracting is direct via the sort of primary producers, and the big ones being the Kazatomprom, the Cameco, BHPs of the world. So that's where the absolute majority of the primary demand is met, if you want to. But a lot of those contracts, even though there might be for 10 years and delivery starting 2-3 years out in time, they still get delivered at whatever the prevailing spot price is at the time of delivery. So even though it feels like, the spot market is not that important, well, a lot of these contracts that are already in place that are getting delivered throughout the year are delivered at whatever the spot price is. So the spot market is important. And even though the volumes have shrunk a little bit this year, there is still a fair bit of activity going on. And obviously we've seen a bit of a move in the spot here quite recently as well.
Let's go back to the conference for just a minute. Outside of its beauty of its location, what were some of the key takeaways or reoccurring themes that you are going to walk away from?
I would say this year, much more so than prior, it was a very focused on utilities. There was some really great presentations. There was great panels, a lot of insights being shared. It started off on a very good session where you had a representative from the Chinese organization was just giving a little bit of a glimpse into the program that they're having there. And even though you're familiar with it, you hear it, but once you actually hear someone showing it to you and showing you the slides, they have 21 reactors under construction. They're going to be completing 10 to 12 reactors per year over the next 5 years, between 25 and 30. It's just an absolutely mind-boggling what they're doing there, and they're doing it very well. They're being very successful at it, but this obviously means that they're going to need a lot of uranium, a lot of conversion, a lot of enrichment to fire up these reactors as well. So even though it's not overlooked, it kind of is, because the sheer size of it just pales everything else. So it's always good to hear from the Chinese when they are there. There was a representative from EDF who was speaking as well and just giving a glimpse into the French program. And he was saying that the 56 reactors they have in France, all of them are going to do life extensions to go for 60 years. That's a very significant increase in demand. In most models, they look at the French reactors. Okay, it's 40 years, maybe 50 years. But this is, you're adding a lot of demand into models by just assuming that now they're going to be going for 20 years. And this is not even counting the 14 French reactors, the EPRs that they're going to be building too, which is 1,600 megawatts each. So those are just absolutely enormous reactors. So very, very bullish when it comes to the development of new demand. And obviously the nuclear energy in general is just really have some good tailwinds right now. And it's just in a really good space. And it's more up to the challenge here for the nuclear fuel industry to be able to meet that. So to make sure that the fuel is there when it's needed. There was some very interesting panels too, where you had US and EU utility fuel buyers just sharing some of their thoughts and what they're seeing coming around the corner, what their focus is. It was interesting to hear that a lot of them are shifting to security of supply is key at this point, right? We talked last year about also, we saw a lot of conversion and enrichment contracting coming right out of the gate after the Russian invasion of Ukraine. And at some point, you're going to see it slip over into U308. And it certainly has started, but you also had utilities saying that, well, even if we haven't contracted for enrichment yet, we are going to buy uranium and conversion anyway, because we know that there's going to be a crunch and security supply is key. So we're just going to go ahead and contract. We'll just do it all simultaneously if we have to. So this is a bit of a shift, and certainly the sense of urgency and importance is really shining through. And I think that will also be reflected in contracting activity going forward.
You talk about the sheer number of reactors being either extended, when you talk about in France, or new reactors being built, as well as in China. Those numbers are pretty staggering, frankly. And in previous podcasts where we've had you on, you've talked about the SMRs, the small modular reactors. Are some of those going to be SMRs? Are they all the major sites? Walk us through that a little bit, what that's going to look like from a landscape standpoint.
The funny thing is the modeling that's being done and talked about at these, when we talked about forecast from the price reporters and the big reporting agencies, they don't have SMRs in their models. The way things are looking today, you'll be well into the 2030s before that happens. It still will happen. I think there will be quite a few of them as well, but on a much more of a near term, that was creating the time crunch or the sense of urgency now is the current reactors operating longer and the really large ones coming online in the next 5 to 7 years. We need new mines to come online. It's not enough what we have today. It's not that it's just that little hump you need to come over. After that, like you mentioned, the SMRs will start to kick in as well, and that's going to certainly create demand too. So it is a challenge, but a challenge I think we're all happy to see because we want to see this industry succeed.
You talk a lot about supply and demand. There's inventory squeezes, particularly with more and more of these utility companies looking at it from a security of supply standpoint. What's the health of that market right now from a supply demand standpoint? Are there shortages? Are there gaps? What is that looking like?
Yeah, it's an excellent question. The title of the conference was Mind the Gap. Everybody knows that there is a gap. Utilities need to contract to make sure that they have fuel for the power stations, and the producers, you need to be sure that you have mines online in time and you can actually deliver on your contracts. It was a good presentation from Grant Isaac at Chemical when he just gave a snapshot of this is what it looks today when we're looking at 2030. And like I said, there was no SMR demand, nothing in there. It's about 200 million pounds a year is the demand we're looking at. And 75% of that can be met by the existing mines, or you can expand the ones you have, ramp them up. But 25% of that, or when he broke down the Western demand, that would be 34 million pounds a year are going to come from greenfield mines that are not in operation yet. They might be in project status, but certainly no permissions, or construction clearly hasn't started yet. And this is going to come at a very different price point than what we're looking at today. Well, I can bet you that 100% of the fuel buyers believe that they're going to get that 75% wedge. Clearly, it's not going to work. Talking to some juniors, they say that while they have to sort of chase utilities before to even get a time of day, they're actually getting phone calls today. So utilities are starting to think strategically. We need to talk to some of these junior mining companies and at least engage in a discussion and see what they're thinking, cost picture, and all these things.
Well, we've talked about that on previous podcasts as well, as far as price points. Price point of an existing producer, price points of a producer that's turning the switch back on, And then probably most importantly, to your point, this filling this 25% gap, new producers. What in your view is that price point? What would it take for a new producer to come online to start doing this?
It's really difficult. Depends on the type of mine, and clearly costs have been increasing quite a bit now. But I mean, when you're looking at what the price point's going to be to get that online in 5 years from now, I think it's at least $80 a pound. But again, this is not my expertise, but as I'm just guessing, but I would think it's probably higher even. But if it's a clear, pure greenfield, it'll be up there. There'll be something very different than what it is today. That I'm quite certain of.
And I guess from a geopolitical standpoint, we spend a lot of our time in the precious metals market as well as the energy transition market. But it's getting challenging for new mines to come online from a geopolitical standpoint, from a nationalization standpoint. Let's shift gears and talk about risk for a minute. What are some of the potential speed bumps or distractions that are you currently seeing or anticipate seeing as we go down this path as well?
It's a lot of uncertainty around government sanctions, both in Europe and on the US. It's really hard to read on this. And these are obviously not market forces here. Then you get something else. It's much harder to predict and know what's going to happen. So that certainly creates uncertainty. But what every primary producer is saying, whether it is a big miner like a Cameco, or whether it's Converdyn with their conversion, or Urenco with their enrichment, is like, we need to see the long-term contracts in place before we are going to spend the capital needed to build these ones, because we don't want to see a situation where we'll build these large facilities and then all the Russian supply is going to come flooding into the market again, and we're going to see depressed markets for all fuel components again. We've done that mistake before. We're not going to do it again. So they're really driving that point home and putting the ball into the utilities court. And I think they are having discussions too. This is obviously, there is a challenge ahead, and both sides want the industry to succeed. And there will be some negotiations. There will be some tough discussions, but I think everybody's got the eyes on the prize at the end of the day.
Going back to China and France, I mean, it's been long understood that France is probably the leader, and China clearly is putting a major flag on that as well. You know, in the U.S., we still don't think of it that way. We do in some degree, but not to the large extent of like a France or a China. You know, what other parts of the world are really starting to embrace nuclear in a more opportunistic or an aggressive way?
There's a lot of new projects popping up. Finland is building big reactors. There's some really positive announcements coming from Poland, which doesn't have a program today, but 5-6 reactors that they're going to plan to build. I was just in UK for a couple of days now after the conference and came from there. And now it's bipartisan support, and they have a very aggressive program. They used to have a very good program and developed their own technique and really provided a lot of insight and knowledge and developing all sorts of methods. And they really want to get back there. It's a great work being done in Australia. They have a lot of uranium, obviously, but they've traditionally been very anti-nuclear. But there's some great movements happening there too. Really across the board and in various stages, you see it's all going in one direction anyway. And that's what's really a good sign in my view.
What about the financial market? Are you seeing more investors come into this market, or is some of the volatility sidelining them? How engaged is Wall Street, so to speak, in this trade as well?
It's a very interesting and timely topic too. I mean, look at the financial market. It feels like they've been in the toilet for more than a year almost, and cash is king, and most investors are still on the sidelines, and they're not really brave enough to step back in yet, or maybe wise enough not to do it, because they feel there could be more rate hikes, and just doesn't really feel certain enough. But I think at the heart of everything is the contracting cycle has really started. We are seeing it on the ground, and obviously the question you keep being asked by the investors is like, how much contracting are you seeing? And we are seeing a lot of contracting. We're just starting to see the price move. And I think over the next months here for the remainder of the year, you will see the price move. There was a couple of investors there, which was great to see. And I have had a few investors reach out to me just via email and phone here over the last few days too, just to get sort of an update. So they're definitely clued in, and it's not necessarily the retail small ones either. There's some really large investors who are getting very interested in this. And I just saw actually in the news today that there's a very large ESG fund who actually cleared nuclear energy for the first time since inception in the mid 80s, I think, of this fund, Parnassus, I think the name is. It's a $42 billion fund that cleared nuclear energy to be able to be part of their portfolio for the first time. So I mean, if you have those kind of players looking at it for the first time, we might be only at the tip of the iceberg, right? So it's all very, very exciting.
Yeah, we always feel like we're sort of the unique people in the corner of the room talking about nuclear from a financial standpoint. But I think you're right. More and more people are starting to see the opportunity there longer term and follow suit. Well, first of all, Per, it's always great to have you on. You give us insight that we really can't get anywhere else as relates to the uranium and nuclear market. But before I let you go, what's coming up for you personally in the world of uranium? You travel around a lot. I know we would all love to hear kind of something cool that you're going to be doing down the road. So what's the rest of your year look like?
Well, I am going to do something very cool in a couple of hours because I'm actually at my cabin in Sweden right now at my parents' place. It's getting close to midnight sun, so I'm going to take a midnight dip in our in our lake here, but I'm staying here over the weekend, and then early next week I'm heading over to Finland to visit the brand new Olkiluoto 3 reactor, which is one of these really large French designs. So the 1600 megawatt reactor. So it's the world's largest reactor is operating. I toured it when it was being built, but now I'm going to see it when it's in operation. So I'm quite excited about nerding out there and see that, and nerding out more than normal actually even. And then in a couple of weeks, I'm going to Japan to be an instructor for a couple of days at the World Nuclear University. It's sort of a leadership seminar for about 80 people from all over the world that they do on an annual basis for 6 weeks. I did it in 2005 when it started, so now I'm coming back as the veteran and going to talk about ESG investments and taxonomy and how that is affecting the nuclear industry. So it's going to be very exciting, and also get input from the very brilliant people that are there and sort of hear from the people on the ground in various countries what's happening there. So I'm sure there will be very interesting discussions over there too.
Well, that sounds really cool. And, I suspect if schedules allow, I'd love to have you on towards the end of the year again, just to hear about your travels, being an instructor and being a veteran instructor now, 15 plus years later. Hats off to you for that one. You said it's close to midnight. The sun is still brightly shining behind you there, which is amazing. Much earned rest and relaxation. And I love the fact that you're hanging out at your mom and dad's place. That's fantastic. Well, for our listeners who'd like to learn more about Sprott and our full suite of uranium opportunities, both on the physical side and the equity side, as always, we encourage you to visit us at sprott.com. That's SPROTT.com. And Per, once again, it was really great to have you on, and enjoy some much earned time off.
Thank you very much, Ed. Anytime. I'm always happy to come back.
Well, thank you. And once again, I'm your host, Ed Coyne. And as always, thank you for listening to Sprott Radio.
This podcast is provided for information purposes only from sources believed to be reliable. However, Sprott does not warrant its completeness or accuracy. Any opinions and estimates constitute our judgment as of the date of this material and are subject to change without notice. Past performance is not indicative of future results. This communication is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Any opinions and recommendations herein do not take into account individual client circumstances, objectives, or needs, and are not intended as recommendations of particular securities, financial instruments, or strategies. You must make your own independent decisions regarding any securities, financial instruments, or strategies mentioned or related to the information herein. This communication may not be redistributed or retransmitted in whole or in part, or in any form or manner without the express written consent of Sprott. Any unauthorized use or disclosure is prohibited. Receipt and review of this information constitutes your agreement not to redistribute or retransmit the contents and information contained in this communication without first obtaining express permission from an authorized officer of Sprott.